Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Arkas Sharma, and we are together again. Ankit, it has been 8 weeks since we have done this together. I have been on the other side of the world, so we have been taking turns doing it. But it's nice to have you back. How you been?
Oh, pretty good. And I must say that, yeah, it's definitely been a while. And a lot has changed in the 8 weeks. So I think you kind of missed out a lot being overseas. But yeah, it's been very eventful last few weeks. And, it's good to be back and doing this together so we can actually have more conversation about it.
Well, I definitely didn't miss it because here's the cool thing. And I started trading back in 1997. And back then, you had to literally go to an office that had a dedicated T1 line because you didn't have internet at home. You didn't have internet on your cell phone. That just didn't exist. And when I traveled, I truly traveled and I got away from it. Now, I travel all over the world. I have traded from Easter Island. I have traded from a cave in central Turkey. I have traded all over the world at all different places. And where it's really cool, there's also a little part of me that says, I just like to have a little break at some point. Now, look, I don't have to trade. I can take breaks. But we had a fantastic market, so I was definitely active. Let's go ahead and jump into the week, and we'll take a look at it. We're going to take a look at the news of the week. We're going to take a look at the broad markets. We're going to take a look at commodities. Gold is hitting an all-time high above 3,000. And as always, we're going to score all of the things we trade from +3 to -3. And that tells us where to go long and where to go short.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Before we jump into the week, let's talk about our summit. It is coming up and it is coming up in, I think, 6 weeks. The 15th annual Maverick Trading Summit in Vegas. And we're going to be talking about AI, how to use AI to make yourself a better trader. We are jumping into everything and really it's going to be awesome. It is going to be absolutely awesome. We're going to show you how to find the right trades, the right currencies, how to basically take everything you're doing and just make it more accurate and faster. Now, we're going to, of course, start off with what AI won't help you do is become profitable. That is not what AI is going to do for you. What it's going to do for you is going to take all of your systems, what you're doing, fine-tune them and make them better. And we're going to walk through how to do that at the summit. All right, let's talk about the week, another down week. So this was the 4th down week in a row, our weakest week since January 2024. So everything is about selling. Everything is about risk off. We did get a bounce on Friday. We'll take a look at that, but it is clearly risk off, and it's all about the tariffs. I've talked about it. I'm really getting sick of tariffs, and it's funny how through all the years, I got so sick of talking about Brexit and so sick of talking about Greece. Like these things, they come up and then they go away. That's what's going to happen with this. Right now it's an issue. Right now it's the only thing the market cares about. And at some point, it'll go away and we'll have something new to obsess over. We did get some really nasty consumer sentiment numbers on Friday, and that's really just echoed everything that we've been seeing, especially out of the US. Last week, let's talk about the big report, the CPI report. This one really surprised me. Last week I said, I don't see how it's going to be less than 0.3 because every single economic reading we'd had before that was more inflation than was expected. It came out at 0.2. The market breathed a huge sigh of relief. The market gapped up, and what did it do? It sold off all day long and went negative. I had a couple traders reach out to me and said, Rob, why is this? Why did this happen? I thought this was supposed to be a good thing. Well, look, remember, we've been talking about Goldilocks. We've been talking about the Goldilocks economy. Not too hot, not too cold. I know inflation lately has been a big, ugly word because it's been too hot. However, on the other side of inflation is deflation, which is too cool. And if you take a look at the PPI that we got on Thursday, we had negative PPI. So we've all felt the sting of higher inflation. But some of you have not felt the sting of deflation. I know you say, oh, that sounds great. Prices are going down. Yeah, prices for everything are going down. That means all asset prices are falling. That means that they're falling because there is less demand. So it's not a good thing. So these numbers, where I gave a quick sigh of relief, it's actually confirming the other numbers like consumer sentiment that, hey, you know what? This economy is slowing down rapidly. And that's what it's showing in these numbers. So again, we want Goldilocks. Not too hot, not too cold. These numbers were too cold. We also heard from the Bank of Canada. They came out, cut rates by 25 basis points, but they said, hey, that's it for the moment of cuts. We're going to really take a look and be cautious on any cuts past this. We got GDP from the UK. It was less than expected, but the pound actually was about flat on the week. So it's still one of the better performers on the week. Let's take a look at the final numbers for the week, and then we'll put this week to bed. We take a look at asset classes. We've got the S&P down 2.5%. The world index has been doing better. Take a look around the world. World markets are doing much better than the US market. The US market is clearly the worst at the moment. Over the last 4 years, it's been clearly the best. It's now shifting to international, looking much better. Crypto was flat. If we took this on Thursday, it would have been down about 5 or 6%. It had a nice bounce back on Friday. Gold above $3,000 for the first time. Why is gold moving? Well, look, gold is worried about two things. Risk. When people are worried about money, they run and hide in gold. And number two, stagflation. Stagflation means that, hey, you know what? Inflation is going to stay high, but growth is going to slow down and maybe go negative. That's a really bad one. Gold is a hedge against that as well. Let's talk about if we truly do go into deflation, gold is actually not a great asset either. If you go back and you take a look at what happened to gold in the 2008-2009 recession, gold lost about 25 to 30%. So deflation is not great for gold. So the case of, markets being shaky and inflation still staying high, it's why gold is moving higher and probably stay strong until that changes. If the deflation picture really starts getting going, then it's definitely going to hit that asset class as well. Let's take a look at charts here on the S&P. I've been very, very clear lately that as we've gone and dropped, I said, I'm waiting for the break, the bounce, and the fail. All right. So you can see that we're getting the bounce. We've had a couple candles here, all looking to try to bounce. Friday, we close, we're getting a green candle. I need to see a little bit more. I just need to see a little bit more bounce to really say, okay, this was the bounce. This is not conclusive that this is a bounce. Give me one more candle. Give me one more green candle, and I'll be happy and say, okay, that's the bounce. And now we're waiting for, and when it gets into this area, 5,700 to 5,770, does the S&P 500 fail? And if it fails, I'm telling you, it's a great sign that we are now in a bearish market for the next couple weeks, next couple months at least. That's what that's going to confirm to me. However, if we go back and take a look at all the times the S&P 500 went below the 50-day moving average, we can see that we never really got that pattern. We never got that pattern where we broke below, and then we failed, and then fell. Every single time we had a recovery. And look at all these. Every time we had a break, we never had that failure. And that's why I'm waiting. I'm waiting patiently for that rebound and failure. We just haven't seen that. I mean, if you all go all the way back to May of 2024, we didn't get that pattern either. That's why I've been a little slow to say, hey, it's ready to go bearish. I'm just waiting for that confirmation. So I've been leaning bearish. It's been nice, but I'm waiting to really come out and say, hey, you know what? This market looks like a bear market for the foreseeable future. Ankit, what do you think about this market at this moment?
I mean, definitely an interesting market, and I would say that a lot of times we see these pullbacks, we see these like one-time events, and we see sort of market recover. I mean, we saw the last time we had this big market pullback was like back in like July, August last year. We had that big carry trade unwind. This time is different because this is not a one-time event. This is definitely escalating and it's changing people's behavior. There's definitely pain on both sides of the borders, and whoever is a trading partner, I think there's going to be some pain felt. But the biggest thing is it's really affecting people's sort of behavior and sense of spending. Now suddenly you're contracting. You're no longer putting a new business. So everybody's sort of being in this cautious holding mode here, and that's not a good sign if for economy to expand. So I think that's one of the reasons where the Fed indicator for those for GDP is going negative. And I think this time it's a little bit serious. So I think this is where going back to 2022, this kind of reminds me of that. We are getting concerned, and that's going to affect a lot of the numbers. And I think that's really we're going to see in the next coming weeks. So I know we already 3 weeks into this pullback. A lot of that is still a scare. It hasn't really translated into data. But once we get that translated into the data, I mean, we're already getting that consumer expectation. But once we start to see a rise in unemployment rate, unemployment claims go up, we start to see, in fact, all the numbers start to come down, and I think that is where it becomes a more serious event. So I think this is where we are. We need to be a little bit more cautious. A lot of people wanted to think could be a good buying opportunity, and I'm like, look back in 2022. We had that big pullback, we had a big rally, and then that rally got rolled over pretty fast. And I think that's really where I am at, is where I'm looking for the next bigger picture, which is going to be, hey, wait out for that bounce. But I think there's going to be some good opportunities coming ahead as we go into some key data coming in the coming weeks.
Yeah, thanks, Ankit. I am much, much, much more looking forward to going short than long. I've traded in all sort of market conditions over the last 28 years. I love bear markets. I'm super excited. This has all of the ingredients to a bear market. Look, sometimes there's been all the ingredients to a bear market before and it didn't materialize, but a lot of times it did. So I'm definitely looking for this failed rally to go short again. This week, look what was the best performer, the Kiwi. The Kiwi. Now, this is something I talked about last week. I said I don't love the Aussie Kiwi short. I think they're sold out. And what we did is we saw, if we took these numbers on Thursday, the Kiwi would have been flat for the week. Kiwi had a great Friday bounce. So really, this is all about Friday. The euro continues to stay strong. And then take a look at this. We have negative risk-off currencies on a week that the market went down. I talked about this on my Tuesday video, and I said, hey, look, there's lots of stuff that is showing me that there is a bounce in the work. A lot of the risk-off assets have stopped going down, and a lot of the risk-on assets have stopped going down as well. And I pointed out, stocks like Tesla, stocks like Palantir actually were going up on Tuesday when the market was falling. I said, hey, it looks like there's a bounce. And so this is really what that's showing, is we got that bounce. Big question is, when we roll over, is this going to just simply reverse, where Aussie, Kiwi roll back over? The risk currencies are all the best ones. But I got to say, my favorite are the European currencies here. They've done well in both situations. When it was falling, they went up. When it rallied, they went up. So I really still like the European currencies quite a bit to the long side. Crypto fell, and again, Bitcoin up 5 or 6% on Friday. If we took this on Thursday, they all would have been negative. So it was still a negative week, but off of the bottoms. Let's take a look at other markets. We've got the bond yields have bounced back up. And really, the range we're in here is 415 to 440. 415 to 440. We're smack in the middle of the range. I don't really see there's really much of a story here in the bond market, and it's not really driving the dollar much. So I'm not going to spend a lot of time on it. I'm also not going to spend a lot of time on crypto because it's a long-only asset at IB, and it's not a buy here. If anything, it's just low basing. I mean, even with these bounces off the bottom, if you take a look at a daily chart, it's just a low base. It's not even a good bounce. We at least had bounces over here. We had legitimate bounces. And now we're not bouncing at all. We're just low basing. I'm definitely staying far away from any crypto trades. Next week, we do have a ton of data. I'm not going to be able to go through all of it in the time we have. So I'm just going to cover the main ones here. Bank of Japan. The Bank of Japan has been very vocal that they are potentially looking to raise rates. They're at 0.5%. The market is not expecting that, but this is where I think there could be a surprise. And if it's not a we're raising rates, I think it definitely could be a we'll raise them in the future. I think this is a big report here. And I see this yen as is very possible to have a really nice move higher off of this. We also have the Fed the next day. So with the FOMC coming out, they're not expected to cut rates. And it's going to be very, very interesting to see what they say about their inflation expectations. Every other report we've had out, including the Consumer Senate reports, have all seen higher inflation projections. I don't see how the Fed cannot be worried about it. So I think we're going to see that as well. And then we actually hear from the SNB. We hear from them 4 times a year. They're looking to cut rates. So again, the Swiss franc has been one of the stronger currencies. Cutting rates. This is telling me if the Swiss bank is cutting rates, and right now the only reason the Swiss franc is holding up is because of a risk-off move, I really like this when the market rallies. Now, I don't think the market is going to rally. I'm bearish on the markets. But when and if the equity markets finally bottom out, I'm telling you, Swiss franc is going to go to the top of my list. But right here, right now, it's not at the top of my list on a short, and it's not really at the top of the list on a long. And we also have Bank of England. So we have 4 central banks. 4 central banks. Bank of England going to keep rates the same. Well, it'll be interesting to see what they say. Lots of other economic reports. I just don't have time to get into them all, or this video is going to be a lot longer than it should be. So make sure to check this chart for any other important reports. All right, so 4 central banks, be watching out for those. I think the Bank of Japan is the best opportunity. Okay, what do you think about that Bank of Japan on Tuesday night?
Definitely I'm watching that one for sure because, we see a lot of movements. I mean, the Japanese yen has done really well in the last, couple of months. So the big question is, do they stay on course or do they backtrack? I think there's a lot of focus into it. When we take a look at some longer term charts, we can definitely see that it is attempting to kind of break out to the upside. And it's been acting as a nice safe haven currency, which we haven't seen. I mean, all last year, we didn't really see, the yen acting as that much. So we're seeing the behavior difference in the yen. And if the Bank of Japan can get a little bit more aggressive on their policy, I think it's a great time to sort of look at that and look for that big break. So we are up against a key resistance, which has been held since last year. Last year we had a big yen move, and we actually testing it the 3rd time to break out. So we're seeing prices stall from there. I think that if we get a bit more push from the Bank of Japan, we see the yen sort of clear that level, I think there's going to be some great opportunities. But I think, right now, the Japanese yen has done really well. I think it's at a critical point. So we need that catalyst. And I think that's where this meeting is very important to what they say and what their forward outlook is.
Awesome. Let's take a look at those currencies individually, one by one, and score them. I'm going to go lightning fast through these cryptos because I've been very clear. I don't like cryptos long here at all. At all. So Bitcoin falling. Again, Bitcoin's the best looking one, actually. And you can see all it's doing is making lower lows and lower highs. That's it. That's all it's doing. That is a classic downtrend. We do not buy things in downtrends. We just do not. Bitcoin Cash, not good. Ethereum, the worst. Ethereum is the worst. I mean, look at this absolute lack of bouncing here. Absolute lack of bouncing. So on up days, this thing goes nowhere. On down days, it falls apart. It is definitely the worst one here. Litecoin is just as bad. Same thing. No bounces, just bases. That just tells you this thing is so weak. So cryptos for me, completely off the table. Walk us into dollar, please.
Absolutely. Well, you can see that. I mean, looking at the dollar, I mean, what a big shift in terms of the correlation. We had like a good solid 3, 4, 5 months that the dollar did really well starting October. Um, I'm definitely noticing a deviation from the bond yields. I've always talked about how one sort of lead the other. And right now, we're seeing the dollar remains weaker currency, while the yields are actually holding up a lot better. So definitely a bit of a break of that correlation. So when we just take a look at that chart, it is, on all front, it looks pretty bearish. It's in a consolidation phase, so I don't really want to short this until it really breaks out to the downside. So it's consolidating in this range here, and a dollar is not really acting as a safe haven currency. There's that deviation from the yields. I personally don't have looking at the chart, it looks pretty clear, but then when I look at the correlation, there's a mixed signals there. So I think you want to be staying clear from this dollar here. Dollar is no longer acting as how it was in the last few months, where it was pretty much a one-sided trade. Right now, it's in this critical phase here, and we'll want to see which way it breaks. So that's really where we are with the dollar. The last few days, you can see that it hasn't really gone up, hasn't really gone down. So it might just go sideways for another week, but then we'll find out from the FOMC next week, and that probably be a good catalyst. If this breaks above the 20-day moving average, I would then get a little less bearish, and I would rather look for a bit more continuation there. If this breaks below that support line, I think that's where I will get a little bit more bearish on the dollar here. So it looks pretty clear, sideways trade here, but looking for a breakout next week. Now, on the other hand, the Japanese yen, you can see that this thing is kind of stalling here as well. And the lines that you see on the chart, now that's a critical resistance line. And you look at the basket, you go back in time. That's the area that we have tested a few times since that big move in July and August. So we need to clear that area to really get bullish. I think at this point, I don't want to get long until we really break above that resistance. And right now we can see that it's just channeling here a little bit. Let's see, the price action is weakening a little bit in the short term, but I think it's just a short-term correction while markets await the Bank of Japan. So this will be a bullish trade on a further breakout to the upside. Now, when we go into the Swiss franc, and this is where Swiss franc has been a tricky play, because you can see that there are days where it acts as a nice safe haven currency. There are days where it actually falls as the market rallies, and then there are days it's just its own thing. So there's a lot going on with this one. I think, as I've said it before, if you look at a broader scheme of things in the Swiss franc, it's a giant range-bound trade that's been going on since last year. So, we keep bouncing back and forth between that support and resistance. So you got to just take a look at that and kind of, keep in mind is that we just don't have that broader trend. We can find nice trends that could last for a few days, but that's pretty much it. With the S&B on the docket, could that provide us more sort of a reason or catalyst? Absolutely. But meanwhile, just keep in mind is, okay, which currency is acting as a safe haven currency? And we're clearly getting the Swiss franc acting as a safe haven currency here. So the trend score is +2, getting some pullbacks, but overall you can see that those pullbacks have been good buying opportunities. So if the market sort of rally a little bit, continue to rally, then I want to back off from the Swiss franc. But if the market starts to be in trouble, then I think the Swiss franc probably be a better bet over there. Now the euros, you can see this thing has been one of the bigger surprise and bigger mover across the board. And I've talked about it very extensively in my recaps. We actually got into some very critical, broke out of some critical resistance level. So at this point, Could this pull back? Absolutely. I think it's due for a pullback. But again, is that what pullbacks would be a good buying opportunity? I think that's what we're looking for here. As long as it holds that level, I think it's going to sort of consolidate, build some energy, and then maybe break out. But overall, you can see the trend scores looks pretty good over here on both the trend and the velocity. Now, the British pound is another one that slowly it's just moving higher. You can see that there's a couple of down days in the last few days, but then those get bought up pretty quickly here. So don't fight the trend. These are more clear trend, and if they're pulling back, stay away because maybe just going through a pullback phase. Once that recovers, I think it's a good opportunity to buy. Now, the real pain that we have seen in the last few months is really in the Canadian dollar. Dollar CAD is already sitting at that 20-year highs. There's definitely a lot of negative news, I would say, with the CAD, and I think that's where you want to be steered clear for that one, because even though on a day-to-day basis we can see some rallies happening, but then this is just more prone for news shock. It seems like President Trump has definitely more against the Canada at this point, and that's really why the Canadian dollar is really weak. Canadian dollar has held a lot better in the last few months, but in the last few weeks, this has on a basket has really tumbled, and now we're getting a very negative score over here. So be careful. Like I said, be careful with the CAD until we really see things get resolved. I think that's really where we probably see more recovery. But I think for now, it's just the most volatile play right now. Now, when we take a look at other currencies, I feel like Aussie and Kiwi, they're kind of holding it a little better. They're not really falling apart. The down moves have definitely gone lower. In the last few days, like this week is another down week, but you can see Aussie's not really down for as much for the week. So seeing a less of that volatility, what we saw in the CAD. But again, in no shape and form, this is a great buy. So I think that the way Aussie, I would say, is that it's not a great buy and it's not a great sell. It's just kind of in that consolidation phase here. Now, if I take a look at that the relative strength with the Kiwi, I think Kiwi looks a little bit better. It finally broke above that 20-day moving average. The score is getting a little better. This is getting to a 0. But again, the last few times we got that rally, they rolled over pretty quickly. So we still have a lot of overhead resistance to deal with. But these are going to be a better play once they kind of clear out some key resistance levels. So we're getting a nice push today, but we're still below that 50-day moving average. So don't get ahead of yourself. I think the market still needs to work out, with the market sentiment to really get us into the point where things become a bigger buy or bigger sell. Like just how we saw back in August last year. We had a big dip in the markets. We had a big recovery, and some of the things recovered with it. I don't think we're not really seeing that right now. I think there's still a lot of cautiousness here. So the way we trade this market is that, look for momentum. As long as the momentum is there, we want to just jump on that and then kind of move on, because it's hard to predict where things going to go in the next few weeks or another week. But momentum is good that lasts for maybe a day or two. So that's just the way we are trading these markets.
Hey, thanks, Ankit. So really, it's pretty clear to me. I'm just laser focused on European currencies and the yen. I don't want to buy anything else. I do like the dollar. I know, Ankit, you're a little bit cautious about it. I like dollar short. I like CAD short. To me, that is the absolute best play in the market right now. Cryptos look terrible, so I'm not even looking at them. So I'm really looking to pair up European currencies against dollar CAD. And when we get a big, strong risk-off move, that yen is looking fantastic. And I'd love to see that yen break out of those multi-year highs from the Bank of Japan. What's moving right here, right now? Nothing. So again, all the things we are looking to be long, euro, yen, pound, Swiss franc, they're all in a downtrend. They're all not in a downtrend, but they're all pulling back. So they're not showing relative strength at the moment. The things we want to go short, dollar and CAD, they're just hanging out in the middle. So that means that next week, I am not really starting the week off with any trades that I'm really excited about. I'm really waiting for what I've been talking about for weeks. The plunge, the rally, the failure, that is my entry point. That is my entry point. and I'm looking to be long yen, short dollar, and CAD when that happens. So let me go take a look at those charts. I know, Anki, you probably have a few others you want to take a look at. First up for me is dollar yen. And let's really zoom out on dollar yen. I want to just show what has just happened on dollar yen. If you take a look at where we have gone from 100 all the way up to 160, and you can see we got the first kind of break in the strength of the dollar against the yen here, but then we had a big rebound. This was more dollar strength than yen weakness. Because let's take a look at the yen basket, and we'll just see that bounce there was not, the yen stayed strong the whole time. So the yen bottomed out in July and really has just been hanging out here. So when we take a look at that dollar yen chart, it's not saying that the yen weakened, just the dollar strengthened so much during this period. So much. When the dollar starts to weaken, the yen's been holding in there. I really like this chart. So for me, I'm looking at this one on the short side. We're getting a new low. We're getting a bear rally. Okay, great. The question is, when does this bear rally over? Do we have one more candle, two more candles, and then we start to get the fall? I don't know. Nobody knows, but we do know that catalyst on Tuesday is likely going to be a big candle, either up or down. I'm waiting for that. If it's a big candle down for me, dollar yen goes to the top of the list. CAD yen goes second on the list. These are my trades here. Dollar CAD and CAD yen. Now, if you don't want to play around with yen, then euro, pound, Swiss franc, really all of them work. Euro is the strongest, so I'll pair up euro against dollar. So as you can see, nice high base here on the daily chart. Had a big run. We're basing a breakout of 190.50. It's going to be a clear breakout of a buy. We could also take a look at something like pound US dollar. Again, we're seeing the same thing, high base here. So we had a big run up. We now have 6, 7 candles in a high base. This is just a really strong looking chart. So for me, it's pretty clear where I'm looking. European currencies in yen long, dollar CAD short. I'm ignoring everything else. I'm not even going to try to play with Aussie, Kiwi. Not even looking to play with them. Anka, what do you want to take a look at?
Hey Rob, yeah, I agree. Those are the things I was kind of looking at too. I think these are the markets where you just want to stick with whatever is working, whatever is giving you better movements. Outside of that, I'm not really, getting a chart, getting a nice trend going for next few days. It's kind of hard to kind of pick in these markets. So the one thing that actually stood out to me, I just want to look at is the Aussie Kiwi, because again, taking a look at relative strength and weakness, I'm surprised at how long this thing has stayed above that 110 level. You can see that this thing is slowly starting to get weakened here. So I would really like to see this sort of trend kind of budge a little bit here as well. For the most part, Aussie has been a better outperformer. Now, if you zoom out a little bit, you can see that this thing can, if it gets to really give up those 109, 150 area, this thing can get a little bit more bearish. But again, these are what I call those boring trades. You're going in for a bigger move. They're easier to hold because you're just going for that relative strength and weakness, and you're less likely to get affected by that volatility. But again, if you take a look at Kiwi CAD, that's another one that started to kind of carve up to the upside as well. But again, keep in mind is that you're just dealing with that CAD volatility. With any bad news that comes out, it seems like I'd rather be short the CAD than long the CAD, just because there's been more negative news than there has been positive news. Another thing to keep in mind is that in the next few weeks, we have the April 2nd deadline, and we get all this broader reciprocal tariffs that kind of come in play. And again, at that point, market could be a lot different. So you just got to take it week by week and then, kind of trade accordingly. Next week is a very busy week. So we're just going to go every day and just take a look at what's really moving the markets. I'm not married to anything. That's the way to trade these markets here. If there's a good risk on day, then you know what to look for. If there's a big risk off day, then you know what to look for. Just look for wherever the momentum is. I think that's where you're going to see a good risk to reward opportunity.
As Anka said, big week for central banks and lots of economic data. Throw all this in with tariffs and gold hitting new highs. Again, right now is a great trading environment. I know it can be a little scary for new traders because there's bigger moves, but let me tell you why I love these markets. The bigger moves are more smooth. And what I mean by that is that when you get a big move, there's very few pullbacks, very few pullbacks. Whereas sometimes you get these choppier moves. These can be harder to trade even though they go the same amount. I would rather trade a market like this than a market like this. I just would rather do it. I think it's an easier market to trade. They both go the same area, but I just think it's easier. So I like this market condition quite a bit. And again, expect that volatility in the US session when the president is able to speak and tweet. Expect there to be some volatility in that US session. Thanks for joining us. Everyone have a great week and happy trading, everyone. Goodbye.